Hi, Tom Lydon here in Hollywood, Florida at the Inside ETF conference, and I'm here with Sylvia Jablonski and Dan O'Neill from Direxion. Great seeing you folks.
Hi Tom, thanks for having us.
Well, thanks for coming. Listen, it's amazing how this dynamics of the ETF industry continues to expand, but Direxion was really unique in the early years about offering a whole variety of different tools for advisors. So talk about the early years, Dan, and why you decided on the product choices you did and where that brings you today.
Sure. So obviously we're at the Inside ETFs conference, and ETFs are a way to empower advisors. They make decisions and they can implement portfolio strategies. Direxion has always had bull and bear ETFs and levered ETFs, and so we're agnostic as to what an advisor wants to do, but we want to give them the proper tools to allow them to position a portfolio. Historically, what we've done is offer products that are really primarily for tactical users, people who are making relatively short-term decisions about portions of their portfolio.
Yeah.
And most of our products have been levered and inverse. And so we've built a lot of athletic tools that advisors can use, and for the most part they use them as complements to an overall investment strategy.
Yeah. And they become more comfortable with them over time as advisors become more comfortable with ETFs. The whole ability to trade and watching the spreads and implementation, would you say?
Yeah, absolutely. I mean, ETFs are fantastic products. There's enormous liquidity. I think they're incredibly transparent. If you do your homework, they're fairly easy to understand. And so advisors, the ETF business is growing, and part of it is tactical, part of it's strategic, and now you're starting to see alts and things like that. But it's a great industry, and it allows, as I said, it empowers advisors to implement the portfolios that they want to build.
But you've moved past the pure leverage and 2 and 3 times to thematic and then strategic strategies as well. Maybe touch on that.
Yeah, so we've got some strategic beta ETFs, and I think the thing that we're extremely excited about now is what we're calling Portfolio Plus. We're coming out with some lightly levered ETFs, which are really meant to be complements to traditional strategic asset allocation models. And so most of our products historically have been known for being, as I said, athletic, sort of motorcycle more than minivan. Yeah. Now we're offering products that are much more like the traditional ETFs.
Yeah. So let's dig into those, Sylvia. So they're really thoughtful tools, but very simple in nature. And what was the idea behind them?
Sure, so the idea is, as Dan said, a lot of advisors are starting to use ETFs. They've become liquid, transparent vehicles, they're cost efficient, and advisors have structured core asset allocation models around using ETFs. Yeah. So our thesis was, well, if you're an advisor and you have a great idea, you have this core allocation strategy, why not sweeten it a little bit? Why not enhance it a little bit with the extra 0.25 beta point? So what you're doing is really taking a look at your large cap exposure and enhancing it a little bit with a lightly levered ETF. But what differs from this product from our 2 to 3 beta ETF products is that it's not necessarily tactical and short term. It's meant for your 10-year, your 20-year time horizon, and it's meant to enhance your performance.
So if your S&P 500 has done well, your core allocation over time, why not just get a little bit more?
Exactly.
If you're
exactly
long
right.
only, why not get a little bit more, right?
Exactly right.
And as far as the sweep, walk through because you've got a lot of the traditional indexes covered, right?
Yes.
To some degree, all right?
So we have the lightly levered S&P 500 ETF right now.
Yep.
We have a small cap version, and in February you'll see the full suite of products. You'll see the mid cap, you'll see the developed markets, emerging markets, the AGG, and they'll all be 1.25 lightly enhanced exposure to those underlying indices. So basically you'll have all of these different tools and building blocks to structure your portfolio.
Yeah.
And I think to complement what Sylvia said, our question to an advisor is, if you're building portfolios you're very comfortable with, that are risk managed, and why not sum your portfolio rather than sum it to 100%? Why not sum it to 110 or 115? If you're making something delicious, you make a little bit more of it. And so the idea is advisors have all sorts of choices available to them now. There's strategic beta, there are ways that they can try and generate alpha or whatever you want to call it for their portfolio. But if you're already building good portfolios, why not just do a little bit more of that? And in rising markets, the lightly levered 125 funds will generally are outperforming rising markets. So if you're building, and if your expected return is better than your cost of capital, which is really quite low right now, it's the kind of thing you should be thinking about.
Yeah. Or another example would be if you're looking for a 50% allocation in the S&P 500, you can actually put a 40% allocation in with the 1.25 and then have that extra money to diversify elsewhere as well, right?
That's exactly right. You can build a more diversified portfolio, maybe get some real estate or some alts or something else that you otherwise wouldn't have had the budget for.
Yeah.
And not only that, but you can look at it as a pure high beta play. So there are a lot of popular high beta ETFs out there, and this ETF maintains the integrity of the S&P 500 and just adds a little bit of exposure to it. So we're not stock picking. You know, it doesn't change rules. It's completely transparent and pure S&P exposure. And if you look back from 2011, the beta point has remained about 1.25 in this bull market.
That's great. And what as an advisor, trying to justify your existence, what a great way to get a little bit alpha, right?
Yes.
I would make one other point, which is that there are a lot of, I think, excellent strategic beta ideas, and they're clever and all that, but it's hard to figure out what they replace in your portfolio.
Yeah.
If you like an idea, you see something, but it may be answering a question which no one is asking. This sort of product is actually, you know exactly what to replace or supplement your portfolio with. The S&P 500 lightly levered product is a complement to the S&P 500. It replaces that, it gives you a little more of that. So
no mystery.
It fits right in. There's no mystery, that's right. It's going to perform the way you expect, and you've already modeled those performances, those expectations.
Excellent.
So we're very excited about it.
Well, congratulations, Dan, Sylvia, great seeing you. Thank you.
Thanks, Tom. Good to
Nice,
see
thank
you.
you.